Now to the other big story that we have been tracking here on Bloomberg UTV. After Corporation Bank, it is now the turn of ICICI Bank, the country's largest private lender, as also HDFC, the largest housing finance company, to discontinue their teaser home loan schemes. Now, what can be the possible impact? That's what we are questioning.
That's right. Is it the beginning of the end of these schemes? Joining us is Harsh Roongta, CEO of Apnapaisa.com, a portal that analyzes prices of financial products like loans and insurance. Mr. Roongta, a very good evening and thanks so much for being with us. Now, just to start off with, first of all, to get a sense, how popular were these schemes?
Oh, teaser loans were extremely popular. I should not use the word past tense just as yet. So teaser loans are extremely popular.
But of course, they are going to be soon history, going by what the RBI wants.
I would not be so quick to write LG for teaser loans. They're very, very popular. Maybe they will change shape, and the way I see it, even if they will no longer be teaser loans, but you would definitely have loans that will remain fixed for a certain period. I think those are very popular, especially in this environment where we're seeing interest rates go up, or they're likely to go up. I think an environment where 3 years the rate is fixed may not be a lower rate. It may be 8.5, 8.75. So it's not a lower rate. So there is no teaser element involved in that. But I think we will see more of those schemes coming in definitely. And if SBI decides to continue what they call special home loans, I don't think the rest of the industry has any choice. Anybody who wants to do home loans seriously would have to follow.
So do you actually see perhaps an impact on demand for housing loans with these rates coming to an end, at least temporarily?
Tough to say. I think interest rates is one element that goes into fixing demand. I mean, ultimately property prices are a much bigger element into fixing the demand for home loans. And I think if combination, we have already seen high property prices, and if interest rates also rise, yeah, that's one more straw that gets loaded onto the camel's back. So, I mean, if interest rates go up, as they are likely to, and if property prices remain high, yeah, sure, demand is going to be affected. It's already affected to a certain extent. And if interest rates also go high and property rates don't soften, we will definitely see an impact on demand.
But Harsh, as far as this move is concerned in trying to retract teaser loan rates, as far as all these banks are concerned, what do you think is the thought right now? Why are they doing this?
Why are the banks offering teaser rates?
No. Why are they thinking of pulling them back?
So obviously, I think the regulator has made it very clear it does not like this concept of increasing teaser rates, increasing rates. I don't think, so we have had fixed rates resettable after 2 years, 3 years for times immemorial.
So that's what we're saying, that, right, you know, it's the lure of a lower interest rate that will bring more people into the fold. But the question that, RBI is raising is that, will they be able to sustain it? Will they be able to recover the loans that they give out? And they don't want a scenario where people are unable to meet their outgoes as far as servicing of these loans are concerned.
So just one quick point there. I mean, what's the alternative? Alternative is regular floating rate loans, right?
That's right.
And those are going to rise as well, right? I mean, we're seeing, what is the risk? Risk is that interest rates will rise, right?
There you know exactly how much is going out. At this point in time, today, I'm lured. Today I'm seeing a low interest rate, I'm lured. But this is going to last only for 2 or 3 years. But what happens after that?
So I don't really subscribe to that theory, because the amount of, the amount of teasing that's happening is very low. I mean, you're talking of the difference of about 8.25 to 8.5. You're talking of 25 basis points to 50 basis points. I don't think the step-ups are extremely steep. So I don't really share the amount of concern that's been shown. Sure, I think there is an element of risk there.
Right.
But,
so you would rather have these teaser rates continue?
As a consumer, oh definitely. As a consumer, definitely. It does carry a certain amount of additional risk as far as the banks are concerned.
Yes.
What the banks have said is that, okay, we are calculating eligibility based on what the regular rate would have been.
Sure.
And therefore, why is this risk any different from if I was to just give him a regular floating rate loan? See, the risk is carried. When interest rates rise, your risk of default will rise, whether it's a floating rate loan or whether it's a step-up loan.
Fair enough. So what's the final word? That people, if they're seeing teaser rates right now, should they go in for it?
Oh, definitely. They should go for it while it lasts.
While it lasts. Well, Thank you so much, Harsh, for joining us with your perspective. Always good to have you on the show.